Good morning, ladies and gentlemen, mums and dads, boys and girls, and mum. Hi, mum. Dornbush download number 58. Dowie, we're closing in on the 60.
We are ticking along, absolutely.
They said we'd never make it, including here in the office. We didn't think we'd make it this far. But anyway, Dornbush download number 58. Back from the Sunshine Coast and Mooloolaba. Underwater World, no longer Underwater World, now called Sea Life.
Really?
There you go. So that's your interesting fact for today. Share
Some
market.
marketing genius would have thought of that, I guess.
Well, actually, there is a share market connection there. It was Living and Leisure Australia, and they got bought out by Mercury, not Freddie, the UK company back in December 2012 or 13, paid around $5 a share, and they've got this Sea Life brand, so they've sort of been rolling it out. No parking. So if you want lots of good things to see, happy for little 3-year-olds, like touching sea urchins and seals and stuff, but parking, bong bong. Anyway, let's talk about shares. So, share market had a nice rally whilst I was away. I probably should go away a bit more often. Is it going to continue, Michael?
Oh, well, Andrew, I think it's pretty much on the back of those weak and on-farm payroll numbers that came in the US over the weekend.
So in English?
And basically now, the assumption is that the Federal Reserve in America won't increase interest rates. And looking at their little predictor on the CME Group website, there's now, the futures contracts are basically reflecting a prediction of a 5% chance of an interest rate rise now when the Federal Open Market Committee get back together at the end of October. So markets seem to have bounced on.
That's a huge shift because, it was only even like 2 weeks ago that everyone was saying this is a done deal. They're going to increase interest rates, and now you're saying there's only a 5% chance. It shows you how fickle things are at the moment as well, isn't it?
Absolutely. I mean, that figure will change, of course, as we lead into closer to the end of October. But yeah, certainly at this stage now, the market's under the assumption that rates will stay on hold in the US for at least the next meeting.
And whilst we're talking interest rates and a question without notice, no interest rate change yesterday. Do you think November's meeting there might be a rate change here in Australia?
Yeah, look, we're only talking about this earlier, and Melbourne Cup has seen the odd interest rate cut in the past, because I think, November's probably really the last time, that they can do it for the year.
They won't do it in December.
Yeah, December's unlikely, and of course January's a month off for the Reserve Bank. So, look, Andrew, anything's possible. At this stage, you'd have to think it's probably still unlikely, and if we're going to cut, we'll probably see that early in the new year. But yeah, Melbourne Cup has been in the past a time when the Reserve Bank has moved.
But it's interesting we're having this conversation this year after we've already had 3 interest rate cuts. Talking about a potential 4th one, and if not November, then certainly February. You'd have to think it's pretty much a done deal. Yes. And so those two, coming back to share markets, those two things together, US holding off and increasing their rates, and a better than even money chance if we're continuing our Melbourne Cup theme of, as my microphone's getting all itchy, that in fact that will be highly supportive of share markets, that with interest rates going nowhere, cash returns are just rubbish. And I think one of the things we've seen a bounce back in over the last week or so is banks. Banks have kicked pretty hard. We've got ANZ, NAB and Westpac all come dividend in the next 45 days, and I think you and Dan spoke about that last week, that banks do tend to run into that. We've seen energy shares bounce back, Woodside, Santos, Origin, and then of course we've also seen materials have a bit of a recovery as well. So there seems to be a school of thought that 4,900 level for the market that we saw a couple of weeks ago was pretty much the bottom, and here on in, it might actually be a nice little rally into Christmas.
Yeah, look, I agree 100%, Andrew. I think, come end of October, if there's no interest rate rise in America, very strongly the view that we'll then rally further through November, and we should then again lead into the traditional Santa rally through mid to late December as well. So market's probably primed for a bit of a bounce back if the moons are in alignment, so to speak.
After a pretty horrible, certainly 6 to 8 weeks that we've had recently. Now, was there anything that you wanted to cover off on?
Look, probably, Andrew. I guess we're into we start off banking reporting season tomorrow. Bank of Queensland first. Cab off the rank, reporting their results to the end of August, their full year results. Market's expecting anywhere between 350 to 356 million cash profit. I think Bloomberg consensus was 356, so they're probably a little bit on the optimistic side. But again, we'll be looking at mortgage growth, of course. We'll be looking at whether there's been any increase in bad and doubtful debt provisions. Net interest margins will also be a focus, just to see where there'll be some pressure. I mean, certainly at this stage, you'd have to think the bad and doubtful debts will probably, sneak up a little bit.
Or at the bottom of the cycle. So you'd have to think all the banks, and BOQ, as you're saying, first cab off the rank will show that.
Absolutely. So, again, it'll be marginal, but, the market will be pretty keen to see those. And I think, looking at it in the grand scheme of things, I mean, bad and doubtful debts for banks are typically about 20 basis points or 0.2% of gross loans and applications. So, in the grand scheme of things, they're still in pretty good shape, but any increase in that area does sort of worry the market a little bit. We'll be looking for a 37 to 38 cent per share dividend, which on the current price for Bank of Queensland is probably about 3.2% for the half year.
So. Wow. So annualised, it's around 6 and a bit percent. So again, 2% sitting in the bank. Yes, you're capital protected, so it's unfair to compare them. But if you were simply chasing yield, as we were saying before, the banks are certainly attractive if you're prepared to accept more risk and more volatility.
Yeah, absolutely, and a bit of franking on top, of course, as well, which probably gets you close to 8.5%. So Bank of Queensland will be interesting. As you say, the banks have bounced back a little bit, though. They've come back to a much better value sort of proposition.
Oh, absolutely.
So perhaps another opportunity to relook at banks. Particularly if the Bank of Queensland result looks good.
Especially though, and we said this all year, make sure that your banks are under 40% of your portfolio. If your banks are over 40% of your portfolio, you've got to have a bit of a conversation as to why that might be the case. And the reason we're saying that is because banks make up 40% of the index. Brief one from me, because I spent too long talking about Mooloolaba. Link Market Services. So, when you get your dividend statements and whatever else, one of them will be from Computershare, one of them will be from Boardroom, and the other one will be from Link. And Link is actually about to list on the ASX, and we've put our hands up for some shares in Link. We find out over the next few days as to whether we're going to get some of those. PE is probably a little demanding at around 21 times, yields around 2.5%. So on face value, you probably go, it doesn't appear to be super overwhelming. Of course, the last time we had these types of conversations was with QR and Horizon, and I think we were all sort of going, look, it's all too high. And I know Andrew personally was saying that, and one of the things I guess I didn't take into account was that annuity style income, that predictable income stream that had. And if you look at Link, it's in a similar type of space as well. The other thing with Link is that it's getting involved with superannuation and registry work there and trustee work there as well. And as we know, super is growing by a mandated 9.5% per annum. Never mind what the government, what the markets tend to do there as well. It's the biggest float of the year, so the institutions will be chasing it. And as an aside, I don't think I've even told you this yet. I was speaking with the underwriter. The underwriter wants a list of all of our shareholders, so that they can make sure there's no institutions involved. And that's always a really positive sign, because if they're trying to flush out the institutions, what that means is the institutions will have to go on market day one and to buy them. So I take that as a really positive sign as well.
Yes.
So certainly, if you have some interest in the largest IPO of the year, have a chat to Michael, Andrew or Dan, and does Dan used to sit there? He now sits over there, and we can give you a hand. Otherwise, Michael, I think it's about us today. I can't speak at the moment. I'm just gone all tongue-tied.
It's been that sort of week.
It's been that type of week. Well, I've only been back from holidays for 2 hours. That's my excuse. See you next week.
Thank you.